money on the week, even though it was created by news. Okay, and then let's ignore that week for now because that was created by news. And then I told you about, now I'm gonna tell you about this thing, this week right here. Okay, so I told you where will the first order block be?
On the
On the
opening, on the base.
opening. You see how
Yeah.
price, this opening of this candle, it came back down and then mitigated. It mitigated this. Then
Like
where will the
in
next one
the
be? Yeah,
yeah,
what's it?
in the case of this cell candle, uh,
Yeah,
let
you
me
say.
annotate it. Like what must have
Okay.
happened is like it went like this, then it closed like this, right?
Yeah, yeah, yeah. It
So
it it,
this must
it
be our
sold and then it bought.
uh, this should be this whole cell candle should be our order block, right? In
Yeah,
that
now
case,
so there wouldn't be just one single candle, right? There wouldn't be one
yes,
single candle. There'll be like this,
yeah, there will be
one
multiple
like this.
candles.
Yeah, there'll be multiple
Yeah,
candles. So then, so right here, like this, I'll tell you. Now I'm talking about the week. This is what would have happened on the lower time frame.
yeah,
Price sold back down like this, and then buyers started pushing it back up. Okay, that's what would have happened. You see that?
yes,
This is what would have happened. Okay, so
yes,
like I told you, this acts as an order block and as well as an imbalance. Okay, so now you see there will be imbalance from this low to this something right here. Okay, and then we even have this order block right here. Okay,
okay,
hope it's clear. It's very simple. It's very simple. You don't have to overcomplicate it because now say we have this and then this once again. Okay, like I told you, the
yeah,
first one would be on the opening right here, and then the second one would be on the 50% right here.
yeah,
Okay,
I got it. Yeah,
okay, awesome. And then right here, now what happened here was price came back down and then it pushed back high. So I told you, first one will be on the opening. You see, that has
yes,
been mitigated by this candle, by this wick. Came back down, mitigated, and then went higher. So now we know where is the next one on the
in
50%.
the middle, yes,
Yeah, see that? On the 50%. See how price came into it. Okay, you see that? You see how accurate? See, we didn't even want to go to a lower time frame to refine it. Just from the 4 hour, we got it. See, that's
yes,
where exactly price came in. So that's what I did. Okay, I wanted to buy from here, but this happened with news. Okay, this happened with news. So you know, during news, spreads will widen up. Okay, spreads will widen up, so we cannot buy it from this low right here. Okay, so I
okay,
bought it from here. Okay, and then so you know about liquidity, right? Where liquidity, and you know about
yes,
liquidity. Now the problem comes when you're going to choose an order block, right? Because there will be multiple order blocks all over the place, like all over the
yes,
place. Okay, so now how do we determine the right order block? Okay, the right order block.
yeah. That is the
So
biggest
now
question.
this works every time. Yeah. Okay, I'll tell you. Now this works all the time. Okay, this works all the time. So now before choosing an order block or a point of interest, okay, now if we're in a bullish market, it needs to rest in a discount price. Okay, and
Okay,
then okay, in a bearish market, it needs to be in a premium price. But what
yes,
makes it high probable? Yeah, what makes it high probable is liquidity must be fed into our point of interest. Okay, liquidity must be fed into the point of interest, which means now if we are in an uptrend, okay, if we're in an uptrend, say this is what happened because price does not move that perfectly. So this is what it would do. Okay, we had a break of structure right here. Okay, we had a breakout structure right here, and then I told you, I told you. Now, to determine the right order block, there needs to be liquidity fed into that point of interest, which means now, can you see these equal lows? Okay, can you see that?
Yes, I can see that.
Okay, so we have equal lows. So we know that equal lows will be taken out. That's basic smart money. You know that,
Yeah.
right?
Yes.
We do not buy from equal lows. So now, if you have an order block right here, would you trust? Will you trust it?
No.
No. Why?
Obviously, there are a lot of chances that the smart money, the institutions will take out this equal lows because
Yeah,
a lot
for
of
sure they'll do that.
stop losses are there.
Yeah. So now what we will do is we will determine something right here. Simple. Below it. Because now you know that this will be taken out. So that's it. So price will take out all of this liquidity and then tap into this. That is it. So it's not that hard. You see how liquidity has been fed into this POI right here. You
Yes.
see now there are stop losses. Now these stop losses have been fed into this POI, which means now once these stop losses have been taken out, price will, which means the market makers are now in profit because the retail traders or the breakout traders or anyone, the people who trade support and resistance, now they will place their stop losses right here, right? If
Yes.
they buy from this equal lows, their stop losses would be right here. Okay, so now where their stop losses are is where our entry point is. Okay, I hope
You
it's
are
clear.
not audible
So they
clearly. Okay.
now,
Now you are. Yes. Like it start when you were explaining this
okay,
something
I'm
like
sorry
that.
for that.
It stopped.
Yeah, there's some issue with the connection. Can you hear me now? Is it?
Yes. So can you explain from here again, like what you were explaining here?
Can you see?
Yes.
Yeah, sure, sure. So now, can you see how liquidity has been fed into this POI?
Yes.
Because now the people who trade support and resistance would view this as a support. Okay, and then
Yes.
people would even look at this as this M pattern. You see that?
Yes.
This M pattern line. All of those crazy stuff. Okay, and people now even the breakout traders would place their sell stops below this. So now you see how liquidity has been fed into this POI. We have
Yes.
all of these stop losses resting just above it, which means now you know that price will do this. It will take out all of these lows. Now what they do is to trap more and more people into this. They'll come back down and then they'll even give a reaction from these equal lows, which means now even more traders would jump in,
Yeah.
right? They'll give a huge
Yes.
reaction like this, and then comes this, the manipulation. The
Yes.
manipulation straight into our point of interest, and then boom, that's it. You see, there needs
Yes.
to be liquidity resting just above or below it. Now, in this case, there needs to be liquidity resting just above it. You see that?
Yes.
How
Yeah.
how liquidity is just chilling? It's just chilling above it. You see that?
Yes. This
Okay.
markup looks like one of the recent trade you took on GU.
GU. Yeah. I'll show you. So we'll go to the 1 minute time frame, and that's like magic. I'll show you everything on the 1 minute time frame because you can stack up orders every time. You would have seen my channel, right? Like I
Yes.
take
Yes.
orders
Yes.
out of everywhere.
Yeah.
This is what I do. This is basically what I do. That's all. Okay.
Okay.
I'll just show it to you because once we go into the chart examples, you understand it better, and you even have the recording so that you can watch it, rewatch it, and then once you back
Yeah.
test, you'll see what I'm talking about. Yeah. So and then on a lower time frame, I'm sorry, on a bearish market, this is what would happen. Price will come back down, and then you see it creates this little resistance right here, equal
Yes.
highs, equal
Yeah.
highs, and then it will come back down. So now, would you trust any of this order block? No, right? Because
No. Yeah.
what is the reason for you to trust this? There, I told you, if it's a high probable point of interest, there needs to be liquidity fed into it. Okay, there needs to be liquidity fed into that point of interest. Now, you see, there's nothing. No liquidity has been fed into this. No liquidity has been fed
Yes.
into this. But which one
Yes.
has liquidity resting below it? See that?
Yes.
because there's a ton of liquidity above this. This is a liquidity pool, and then people would even
It
do
is.
this.
Your
Yeah,
voice
what's it?
was stucking again. Like.
Ah, shit. There's some issue with the connection. So am I clear now?
Yes.
Okay, okay. I'm sorry for that. And then you can see this now. Just this little resistance being formed just below our POI. Okay.
Yes. Yeah.
So now we know what price will
It is
do is
stucking again.
what price will do is it some problem with your connection or my connection?
Uh, I think my connection is working fine. Let me check. Okay. Can you give me a minute?
Okay. Yeah, yeah, sure.
I'll just check.
Okay.
I don't think it is a problem with my connection. Like I tried playing a 1080p video, so like it was playing without any buffering.
Yeah, yeah. So if it happens
Yeah, it is still stuck. If you are
again, you
speaking
can
something,
just
I
tell
cannot
me,
hear.
okay?
It is still happening.
Still? Okay, okay, give me a
Yes.
minute. Okay. Can you hear me now?
Yes.
Okay. I'm sorry for this.
Like sometimes it happens that your voice completely goes out.
It goes out. Okay. So if it happens, just tell it to me, okay? Tell it to
Yes.
me if it
Yes.
happens. Okay. Now, can you see how this resistance is being formed right here?
Yes.
Okay, which means now this acts as a pool of liquidity because we have tons of stop losses above this.
Yes.
Okay. So now we can expect this. We know that equal highs has to be taken out. Okay.
Yes.
So now the stop loss would be our entry. So price will do this. Now what makes this high probable? What makes this point of interest high probable is the liquidity resting below it.
Yes.
Okay. Now price will come back up and then boom. That's what they would do. Okay.
Yes.
Okay. Now
Sometimes
yeah.
something like this might also happen that this is our order block, and like the
Okay.
price went with a lot of momentum, and it came like down here, and it created liquidity here.
Yeah.
It will
And
also
then even
be.
this even this would make it high probable because now we have equal lows just below this.
Yes. Okay.
Okay. Okay.
Yes.
Now so once it comes to liquidity, okay, once it comes to liquidity, not only double tops and double bottoms act as liquidity.
Yes.
Okay.
Yeah.
Now what the retailers have been taught is this: if price comes back down and if it breaks structure, right, like this, and
Yes.
and if it retraces and then if it breaks structure once again, okay, if it does that, now retailers, okay, I'm talking about retailers, how they have been taught in their textbooks is that this low is a strong low because it broke structure, it retraced, and then it broke structure once again. Okay, so now
Yes.
retailers would view this as a strong low. You see that?
Yeah. But even we view it as a strong low now.
I don't. I don't.
Yeah, I
So I
also do.
have a lot of reasons to.
I learned it in
I'll tell you
Phantom.
why. Phantom. Okay. Now they would view this as a strong low. And now what the breakout traders would do is once they find a strong low, okay, they'll place their sell stop below it. Okay.
Okay.
Okay, they'll place their sell stop below it because why? They think if now this is a strong low, and if it breaks, they'll think price has to continue going lower. That's how they would view it, right?
Yes.
Now we will have stop losses of the people that bought from this low. Okay, that would be around here. Okay,
Yes.
because now we are the ones who are trading intraday. Okay, we are the ones who are trading intraday, and only we trail our stop losses. Okay, like we take it higher and
Yes.
higher. Now that's what we would do. But most of the position traders or the swing traders, these hedge funds and stuff, what they do is they trade on the higher time frames because they have a lot of money to risk. They'll
Yes.
trade on the daily time frame or the 4 hour, and I don't think they'll go below the 4 hour time frame. Okay,
Okay.
now what they would do is once they find a strong low, they place their sell stops below it because now they would view this as a strong low, and they'll think if price breaks it, it will just keep continuing going lower. It will keep continuing going lower. Okay,
Yeah.
that's how they would view it. And then, so do you know what an inducement means?
Yes, they taught it in Phantom. Like it basically acts as a place where people will enter the trade, so that
Yeah,
and the BFIs use it as a place where the orders are induced basically,
induced.
so
Yeah.
that they
So
can take the liquidity created by the
yeah, what
orders.
what an inducement actually means is like the market makers or the banks or anyone who controls these markets, they will induce people into doing something wrong. Okay, now you see
Yes.
this thing will be seen as a strong low because now the inducement is very very important because if you know where the inducement is, okay, if you can like once you look at the market, if you know where the inducement is, you can enter anywhere anytime. Okay, even on the 1 minute this happens, and even on the seconds time frame this happens because price is fractal. Okay,
Yes.
okay. Now we have this low. I'm talking about this low, this specific low. Okay. Now breakout traders would view this as a strong low. Okay,
Yes.
and then they'll place their stop loss below it. Okay, and then they'll even have their sell stops below it because they think this is a strong low. Okay, they'll even have
Yes.
their sell stops below it, and then even smart money traders would get trapped. I don't think Phantom and the NZ they taught this. Even smart money traders would view this as an order block, right?
Yes. Yes.
And then now even you would look at it as an order block, right? Because you see
Yes.
it has everything. It has all the
Yes.
confirmations. Took out liquidity from all of these lows.
Yes.
Okay, and then it broke structure right here. Okay, it
Yes.
broke structure right here, and it even has a little bit of imbalance. You see, it even has some imbalance. So now we have all the good reasons to sorry, we have all good reasons to consider this as a strong low. Okay, we have all the reasons to consider this as a good order block, right?
Yes.
Because it took out liquidity and then it broke structure. It even has some imbalance left. Okay, but what's missing? The inducement. Where is the inducement? You see that
Uh,
there is no
like
inducement.
in
Liquidity has
Phantom
to
they
be fed
teach
into the POI. Yeah.
that this can be an inducement. Like this is
Okay.
liquidity,
That
trendline liquidity.
okay. But now there needs. That's it. I told you. Even Phantom will not teach you this. Imagine you saw this as an induced trend line liquidity. Okay, that's fine. That's trend line liquidity. Okay, that's trend line liquidity. But and then imagine how many traders would have looked at this like that. This is trend line liquidity, and it took out liquidity from these lows and it broke structure. So now smart money
Yes.
traders would view this as a good order block, right? So
Yes.
now imagine all of the new people to smart money because I would always wait for confirmation. Okay, I'll wait for evidence of
Yes.
reaccumulation or distribution. Okay, and then imagine how many people would have done this, the newbies to smart money. Imagine how many people would have done this. Okay,
Yes.
because it's a very clear order block, right? And then
Yes.
now see because now